Good morning, Nilesh.
Morning, ma'am.
Any doubts in the first module? Do you want me to solve some more problems?
No doubts, ma'am.
No doubts. Okay. Nilesh, can you ask your friends to join in so that we can start the class?
I have asked them, ma'am.
You have asked them, no? Okay. I think we'll start away. Can you see the PPT?
Yes, ma'am.
Okay. So I've started with the fifth module now. I've completed the first module and we're moving down to the fifth module. For your test, I think you'll have the first module and the costing part. Is it clear? Your test starts from October 5th. So maybe in the next three classes, today's class and Saturday's class, I'll do the theory part. And maybe Saturday only I'll start with problems. Saturday, Monday next week, we can do the problems and you can have portions for the test will be, first test will be module 1 and module 5. Okay?
Ma'am, when is the first test, ma'am?
October 5th.
Online only, ma'am.
That I'm not sure. We have to find out. Maybe for the test you have to come or what, I don't know. Quite very shortly they'll inform you the actual procedure. Okay?
Okay.
Okay. Has anybody joined in? Or shall we start? Prajwal. Prajwal, can you ask your friends to come?
Yes, ma'am.
Because we're starting a new module. Ask your friends to join quickly. Okay, let me start. The fifth module is on costing and budgeting. So I have, as the title only splits into two, so this class we'll be seeing only the costing part. Okay. So what is cost accounting? Okay, why do we need this costing before I move on? Why do we need costing in real life? What's the uh, agenda of having it in our syllabus in financial management?
Ma'am, to determine the cost of a product, including all the expenses.
Yeah, to have a clear picture, because today when you're trying to invest on something, that gives a prerequisite for us for starting up the next business, or when we have to increase our production schedule, or when you want to go from one level to the other level, this costing accounts for us, right? So this cost accounting is very important in any manufacturing firm, where we need to record every transaction, every each price, along with the price, what is the other commodities which are included into the price concept. So all that is very important in cost accounting. Now when we see the cost accounting is that branch of accounting information system which records, measures and reports information about cost. Okay, so basically you're going to make a data sheet of all the cost. You're going to have a record of your cost, right? The primary purpose of cost accounting is to cost ascertainment and its uses in why we need to have this cost for decision making and performance in evaluation. To make sure that whatever we have invested is right, or whatever we have paid for a product, is it going to make it profit, or we have paid excess, or is it why there is a downfall. When we need to ascertain the value of it, this cost accounting will help us. Okay. Cost accounting meaning the same thing. Cost accounting is concerned with recording, classifying, appropriate allocation of expenditure for the determination of cost of products or services, and for the sustain and for suitably arranged data for the purpose of control and decision guidance. Same thing, but told in a different way. But what is cost means? The price paid for something. What is cost ascertainment? It is a computation of actual cost incurred. Okay, so all your expenses, but later you will sit down and make all small calculations, right? So basically you're computing all smallest expenses, whatever is involved with the cost, you will make a computation, right? That process is called cost ascertainment. But what is cost estimation? Cost estimation is before the trip you try to estimate what will be the budget for the trip or something like that, right? That is a cost estimation. It's a process of predetermining the cost of goods and services, right? So let me repeat. Cost means the price paid for something. Cost ascertainment is the computation of actual cost incurred. Cost estimation is a process of determining cost of goods and services. Am I clear? Next, objectives of
Yes,
cost
ma'am.
accounting. What is the objectives? So it is estimation of cost, ascertainment of cost, then cost control, then cost reduction, then determining selling price. When you buy a car, how do you quote your car selling price? Buying whatever price you spent it, added the depreciation cost, everything you add, and then only you try to quote your selling price, right? So it basically enables you to find out your selling price as well. Facilitating preparation of financial and other statements, right? And providing basis for operating policy. So these are the most objectives of uh, cost accounting. You need to estimate, ascertainment, cost control, cost reduction, determining the selling price, preparation of the financial statements, and basis for operating policies, right? So these are the uh, objectives of cost accounting, right? So next you have elements of cost. Elements of cost, in this we have materials, labor, expenses. The major uh, uh, three attributes that contribute for us in any manufacturing organization towards the cost are the materials, labor, and expenses. So the material, again, you have direct material expenses, indirect material expenses. Can you name some? Can you name the indirect expenses that comes under while buying the materials?
Capital cost and transportation cost.
Transportation cost and capital cost will be the direct cost. What about indirect cost?
And storage.
Storage. Storage, what kind of storage? Warehousing.
Yes, ma'am.
But don't you think that will be contributing to the direct cost itself? No, first let's talk about what is direct cost, what is indirect cost. You tell me that. Can you tell me what
Direct
is
cost will
the,
be the cost that you are paying only for the material.
only for the material which you have predetermined, and that cost will be uh, which will be coming into the account, right?
Yes, ma'am.
Okay. What is indirect cost? No, you go and buy a material, okay? But I don't know, due to some thing, your material is not available, okay? That material is not available in town, right? So you are agreed to pay some bribery charges or some kind of, which cannot be shown in account anywhere, right? Which can be, which will be included, but in some way or the other, right? So you have not predetermined that this cost is going to be included, right? So such kind of cost we call it as the indirect cost, right? The charges you pay extra for buying the material, it comes under the um, indirect cost, okay? I just want to show you a video on cost. Just a second. Boys, can you see this video?
No, ma'am.
No? Once again, once again. Can you see this now?
Yes, ma'am.
Okay, first I have to tell, we'll talk about direct and indirect cost, then we'll go to this video, okay? Just a little more to cover, then I'll show you. Now, similarly, under the elements of cost, you have labor cost. Labor is the direct wages. In the labor direct wages, all that will go into the direct cost. Indirect cost will be those incentives. You're planning to give an appreciation, bonus. All that will come under the indirect cost. Expenses are those direct charges which are involved with the expenses in buying. Indirect are the small commodity charges or small commissions or all that paid will be coming under the indirect cost, right? Overheads, what are the overheads? What overheads means? What is overheads, boys? Do not solve problems on overheads and all.
And the add-ons onto the
Add-ons
cost.
which are not predetermined but which likely come into the in some transactions, like overhead cost will be like uh, the cost that is which is not expected, but for some management or for some handling charges or something which to carry out the process smooth, there are some overhead charges which you need to pay it to to pay for the process to continue it smoothly, right? So such kind of charges we call it as the overhead charges, overhead cost. Okay, in overhead cost also, for each case, whether it is in we can whether it is in the production cycle or administration cycle or during the selling distribution overheads, all these overhead charges will be laid, right? See, sometimes it happens so that you would have brought a product from the Amazon, or you would have brought a product from the Reliance, or you would have brought a product from something else, right? When you buy the product, they would have said the service is free, right? After they brought the product, after you have bought the product is delivered to you, right? Then you see that human labor you're getting you're very appreciated the way you want to appreciate the way he's handling the boxes and all, so you give some charges, right? Which is not directly connected to the cost of the material, but these are the extra charges that that over the appreciation you're giving him some money, right? Those are the charges which comes under the overhead charges, right? Are you getting, boys, what I'm trying to tell?
Yes, ma'am.
Yes, ma'am.
Okay, so these are the overhead charges. Overhead charges will also be involved with production, administration, and selling and distribution as well. Okay, so just a second, I want to show you something. But is the video visible to you?
Yes, ma'am. YouTube we have opened.
It's not playing. Is it playing?
White Hat's really good. I love gym coding classes.
It's been fantastic to see her journey from hating math.
इजी और स्मॉल साइज एजुकेशनल और इंफॉर्मेशनल वीडियो के लिए हमारा चैनल सब्सक्राइब करें, नीचे दिए गए रेड सब्सक्राइब के
Ma'am,
बटन
could
पर
you
क्लिक
please make it
करें
full
और साथ दिए
screen?
गए बेल आइकॉन
Once
पर
again,
क्लिक
once
We can make
करें
it full
ताकि
screen.
आपको हमारी
Yeah.
वीडियोस मिलती रहे। तो चलें स्टार्ट करते हैं। ओवरहेड, डायरेक्ट कॉस्ट एंड इनडायरेक्ट कॉस्ट। इस वीडियो में हम आपको इन तीनों
You
का
want in
बेसिक
English?
बेसिक कांसेप्ट इजी एग्जांपल के साथ इजी वे में इनका मतलब क्या है वो बताऊंगा। कॉन्सेप्ट से पहले हम इनकी डेफिनेशन को साथ साथ रीड करते हैं। ओवरहेड, ऑल द एक्सपेंस a company need to pay for a like the cost of a advertising, labor, bills and tax। ओवरहेड का जो मतलब होता है, मतलब सर पे जो कंपनी के सर पे बर्डन होते हैं, जो एक्सपेंसेस होते हैं, जो खर्चे होते हैं, जो कंपनी ने पे करने होते हैं, कंपनी को ज़रूरत होती है, ज़रूरी होता है कंपनी के लिए कि उसको पे करे, जैसे एडवर्टाइजमेंट की कॉस्ट, लेबर की कॉस्ट, इसके बगैर ना लेबर के बगैर आप प्रोडक्शन नहीं कर सकते, एडवर्टाइजमेंट के बगैर आप अच्छे से मार्केट में अपनी प्रोडक्ट को सेल नहीं कर सकते, बिल्स जो आपने इलेक्ट्रिसिटी के बिल्स या किसी के जिससे रॉ मटेरियल खरीदा है उसका जो बिल रहता है उसको बिल देने हैं, जो कंपनी ने टैक्सेस पे करने हैं, टैक्सेस के बगैर कंपनी जो है अपनी प्रोडक्ट मार्केट में नहीं बेच सकती, क्योंकि टैक्सेस पे करने के बाद ही लीगली जो है गवर्नमेंट को टैक्सेस पे करने के बाद प्रोडक्ट मार्केट में लॉन्च करके उससे प्रॉफिट अर्न कर सकते हैं। तो ये जितने भी एक्सपेंसेस जो कंपनी के सर पे होते हैं, ओवरहेड मतलब सर पे होते हैं, उनको हम कहते हैं, जो उसने पे करने होते हैं, जिम्मेदारी होती है, उसको हम कहते हैं कंपनी ओवरहेड। आगे है डायरेक्ट कॉस्ट, द कॉस्ट ऑफ अ मटेरियल, लेबर, इक्विपमेंट and all directly involved effort or expenses for the cost object or a direct cost। direct cost वो cost जो directly कंपनी जो है परचेजिंग करते वक्त, रॉ मटेरियल की परचेजिंग करते वक्त और रॉ मटेरियल से बनने वाली प्रोडक्शन और जो प्रोडक्ट बन रही है उसके बनाने के ऊपर जो उसकी कॉस्ट आती है उसको हम कहते हैं डायरेक्ट कॉस्ट। दोबारा से रिपीट करता हूँ, जो परचेजिंग करते वक्त, जो चीज़ों का ख़रीदते वक्त, रॉ मटेरियल को ख़रीदते वक्त, कमोडिटी को ख़रीदते वक्त जो उसकी कॉस्ट आती है वो कॉस्ट और जो दूसरी कॉस्ट है जो उस प्रोडक्ट के ऊपर उसको डायरेक्टली जो मैन्युफैक्चर करने के लिए जो लेबर के ऊपर जो आती है, जो मटेरियल के लिए ऊपर आती है, जो इक्विपमेंट के लिए आती है, जो मैन्युफैक्चरिंग कॉस्ट आती है, उसको हम कहते हैं डायरेक्ट कॉस्ट। जो खरीदते वक्त, परचेजिंग करते वक्त और जो प्रोडक्ट को बनाने के ऊपर जो कॉस्ट आती है उसको हम कहते हैं डायरेक्ट कॉस्ट। आगे है इनडायरेक्ट कॉस्ट। Indirect costs are the or costs that are not directly accountable to a cost object such a particular project, facility, function or a product. Indirect cost may be either fixed or a variable. इनडायरेक्ट कॉस्ट वो कॉस्ट होती है जो आप एक प्रोडक्ट जो बनाई है आपने, उसको बेचने के ऊपर, जो उसके प्रोडक्ट को मार्केट में बेचने के ऊपर, जो उसको सेल करने के ऊपर, जो आपकी ट्रांसपोर्ट के ऊपर कॉस्ट आए, जो आपकी एडवर्टाइजमेंट के ऊपर कॉस्ट आए, जो आपकी इंश्योरेंस हो गई, जो आपने अपने मैनेजर को तनख्वाह दी, वो सारी कॉस्ट कहते हैं इनडायरेक्ट कॉस्ट। इनडायरेक्ट कॉस्ट का मतलब होता है जो इनडायरेक्टली कनेक्ट हो, मतलब जो लेबर
ये जो सैलरीज हम पे कर रहे हैं, सैलरीज जो होती है वो भी इनडायरेक्ट कॉस्ट होती है हमारी। तो जो बिजनेस ऑपरेशंस को रन करने के ऊपर भी आ रही है, जो बिजनेस के एक जो प्रोडक्ट आपने बनाई है या सर्विसेज उसको बेचने के ऊपर, मतलब उसको मार्केट में बेचने के लिए जो कॉस्ट आ रही है, और जो बिजनेस ऑपरेशन को रन करने के ऊपर, जो ऑपरेशन को ऑपरेट करने के ऊपर जो आ रही है कॉस्ट, मतलब जो ऑफिस में मैनेजर बैठे हैं उनके ऊपर जो कॉस्ट आ रही है, जो मतलब और दूसरे इंश्योरेंस वगैरह, डिबेंचर इंटरेस्ट वगैरह, ये जो हमारी सारी कॉस्ट हैं इनको हम इनडायरेक्ट कॉस्ट और इनडायरेक्ट एक्सपेंसेस कहते हैं।
Guys, is it clear? Did you understand now what is direct cost and indirect cost? Do you agree with
Somewhat,
me?
ma'am.
Somewhat. What is that you didn't understand? See, cost is, we all know that cost is a price paid for a commodity, right? Now, when we know that a price is paid for a commodity, now we have to classify the cost. Now, cost in any organization, the cost will be involved in three. Even before in the formulation, I said the cost in any organization it involves in three. That is money, men, and machines. Here also material, labor, and expenses. Right? Materials, you have whatever materials you buy, the cost will be included in the cost involved with materials will come under the material cost. The cost involved with labor will come under the labor cost. The cost involved with expenses will come under the expense cost, right? So similarly, when you look at the direct and indirect cost, so it says above, whatever when you're trying to buy some expenses, so when you're trying to buy some expenses directly, which is in the predetermining, the initial, when the production manager or the operation manager, when he says that in the target, in the schedule plan, if they've placed that the material cost, initial budgeting for the material cost, if they've kept for 50,000 for the materials, so whatever money and whatever the vendor has quoted the charges, that money directly when it goes from that account to the vendor's account, we call it as a direct cost, right? Similarly, the indirect cost. Now, when the material is coming from the vendor to the organization, some material, some charges will be hidden, right? Which you cannot bring it out, right? So, which will not be pre-planned in the budget slip also, right? So, such charges will be coming under the indirect cost. Is it clear now? Like some kind of on the way some the box damage will be there, so if they have to replace the box, such kind of charges and all will be claiming under the indirect cost, right? Without that you cannot bring the material, you cannot start the business as well. So these are the some kind of indirect costs that will be involved in the process. And in the labor also you have some kind of direct charges, you have some kind of indirect charges. In any organizations, if you see, there will be some majority of the laborers will be working on full time, there will be a permanent employee, but some proportion, some percentage of employees will be in the will be on temporary basis. Now those salary, right, whatever the organization credits to them, right, for direct employees, that salary amount, wages amount which comes from the finance department to the salary account will be fixed. There will be no changes in that. Immediately at the end of the month, 31st, 50,000 something, that money will be credited to the salary account. But this indirect cost, right, which we are having on the temporary employees, For them, they might work on 10 days basis, or in place of 5 employees, 4 employees will be changing, or sometimes five, 6 to employee will change. So there is always a change from every month to month. There will be some variations in their payment. Such kind of charges will be called as a indirect labor cost. Is it clear? Next, expenses. Now, expenses also, there are certain expenses which we cannot avoid it. So initially, only in the schedule plan or in the budgeting plan, you would have fixed your direct expenses and you're expecting those expenses to come. But there are certain expenses which we cannot predict, only because of our environmental issues, or because of so many other issues. There are certain charges that we cannot predict well in advance. So those charges which are coming on the accidental, we call them as a indirect expenses, right? Similarly, we have, is there any doubts now, Prajwal? Am I clear?
No, ma'am.
You have doubts?
No, ma'am.
No. Now, overheads cost is, now when you're planning something, you will give some miscellaneous, right? You will finally fix something called miscellaneous. If your parents are giving some budget, at the last you will add up some money called the miscellaneous and put 100 rupees, right? So same thing in an organization. For the production house, for the administration house, for selling and distribution house, there also they would have allocated some money for the overheads, right? So overheads, what kind of overheads we can have? So during manufacturing, the factory overheads can be 20% of the manufacturing cost they can give, or they can tell the marketing people can be charged 30% of their product selling price. That each one, the organization will, it is not accounted, it is not of the budget plan, but some amount will also be allocated. Without this, we cannot run the business. We need to pay those extra charges for the business to run, right? So as I said, you have bought a product. You may assume you have bought a laptop for worth rupees 60,000. You made the payment. Now that laptop is being delivered to you, right? So now after the laptop, actually the cost of the laptop is only 65,000. Okay, assuming the laptop cost of the laptop is 65,000. Okay, so you are working for some IT company. The IT company is paying you that 65,000 to you, right? Now from the organization side, once when they deliver this laptop to you, you're very much appreciated. You want to appreciate him because he safely brought the laptop to you, or something like that. Now you pay him some money, right? Which is actually your budget for buying a laptop is 65,000. Then you give him 100 rupees more for him, right? Those charges from your side is overhead charge for you. Similarly, there will be like this overhead charges in the organization as well. In the production side, there will be some overhead charges. In the administration side, there will be some kind of overhead charges. In selling and distribution side, there will be some kind of overhead charges involved. In a general, they will tell 10% of the manufacturing cost or 20% of the selling cost. Something they would have planned their budget in such a way that they allocate some amount of money for these overheads. Am I clear now?
Yes, ma'am.
Shall we move on, Prajwal?
Yes, ma'am.
Ataktarya, Prince?
Yes, ma'am. Yes, ma'am.
Chandan? People who have joined in, we have started costing. I don't know when you all joined, but we have started the 5th module on costing. Is it clear? Where was I? Okay. So shall I move on to the next slide now? So the next slide is on the material. Okay. So here we'll see the substance from which the finished product is made is known as the material. Okay, the raw materials which we usually claim as the material cost, MRP cost, material resource planning, all that MRP1, MRP2, all that will be involved in the material costing, right? Then direct material is one which can be directly or easily identified in the product, like timber in the furniture, cloth material in the dress, all that we can assess it directly. Indirect material is one which cannot be easily identified in the product, like disposable safety equipment, disposable tools, glue, tape, oil. In cloth, the kind of threading you use. Actually, if the organization is giving some kind of thread for you, but during emergency you want to go for a, the thread has been over, so you go and try to shop immediately, but that cost, that material is not available, so you go for a little higher version of it. So that difference margin will also come under the indirect material cost. Are you clear? Shall I move on?
Yes, ma'am.
Yes.
Next, about the labor. The labor is this human effort required to convert the materials into finished product is called labor. Man hours, whatever man hours are involved, men involved in work, we call it as a labor. In labor also you have direct labor, indirect labor. Direct labor is conveniently identified or attribute wholly. All the permanent employees, for all those whose wages is fixed, we call them as a permanent labor, right? Or direct labor. Wage paid to the carpenter or fees paid to the tailor, all these money will be coming under the direct labor. But what is indirect labor? Temporary employees, which cannot be conveniently identified or attributed wholly to a particular job, product, or process. Is it clear? Shall I move on? Boys?
Yes, ma'am.
Next, these are the examples of direct labor at factory level: foreman salary, then manager salary, gatekeeper salary. At factory level, who was involved with direct labor, right? Then account salary, all the salaries basically will come under the direct labor. Other expenses, what are those expenses other than the material labor? Like they have mentioned tax, right? Those also comes under the other expenses. Now, direct expenses are those which can be directly allocated to the particular job, which we are sure that this is going to be happened, or this has to be, without these charges we cannot move on, which you have predicted well in advance. It's called the direct expenses, like excise duty, royalty, special hire charges. All these are involved in the business, we call it as a direct expenses. Now, what are indirect expenses? Are those expenses which we cannot be directly allocated to a particular job or process or product, right? Which on that particular mode you are getting appreciated, or you feel there is a need, you want to speed up your business, so you hire more machines, or you hire more employees, and to speed up your production on a temporary basis. All that will be coming under the indirect expenses. Is it clear? Examples of other businesses at factory level: factory rent, factory insurances, lighting. At office level, office rent, office insurance, and all that. At sales, advertising, showroom expenses like rent, insurance, all that will be coming under the expenses. Boys, you want to see a video on this? Are you following what I'm trying to tell?
Yes, ma'am. Yes.
What about others? It's a very simple concept. ಬಸವರಾಜ್ ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Chandan?
Yes, ma'am.
Because I'm seeing the slide and I'm explaining, I don't even know whether you're following or not. Only based on your response, Chandan says yes. Prajwal is following, I think. Prajwal? No. Okay, Prince
Yes, ma'am.
is
Yes, ma'am.
following. Okay.
We are following, ma'am.
Now, shall I move on to fixed, variable, and semi-variable cost, right? So, fixed costs are those expenses do not alter in the short run. Okay. For example, which is for sure, fixed cost like rent, insurance, depreciation, all those will be fixed. Nothing like, if you like, for example, if you take a car, your depreciation car will be fixed based on the year you bought. If it is 10 years old, so this is the depreciation rate. If it is 20 years old, this is the depreciation rate. So all those expenses which are fixed, we call it as a fixed cost. Even the rent, in the beginning of the organization, your rent, you have an agreement which they says that so much is the rent and so much will be the other policies, maintenance, all that they give, right? All those are anything that is fixed, we call it as a fixed cost. Now, variable cost. Variable cost is basically, in majority of the organizations, the variable cost usually likely like a, which you can alter it according to the production rate, right? If you say that if the complete production, right? Whatever you're producing, if it is completely dispatched to the customers or if it is completely sold out, then the employees get a variable pay of 10% of the profit they get, or 20% of the profit they get, whatever protocols the organization follows, right? Based on these, variable cost will be fixed, right? Suppose if there is no production at all, if there is a production and the products are not sold to the customer, then they say, then they fix their incentives for the employees by saying that, see, since there is no production, so you're not getting any uh, benefits or any incentives because there is no sales happening, right? So these are the variable cost. If you have your parents, you can talk to your parents, because they also have something called fixed pay and something called variable income, which and all variable income is how much it contributes to their salary. If you have a discussion, you can understand it better, right? So what is it? Expenses that alter in the short run of changes in output, raw materials, packaging, and components. They are the payments for the use of the inputs. Now, semi-variable cost, expenses that may vary with output but not directly in proportion. Okay. Example, maintenance cost. They often compromise. Sometimes maintenance cost, if the machines are well handled by the operator, then the maintenance of the machine is not usually required, right? So it will be coming to a less price. Similarly, the car. If you look at the car, if the car is maintained properly, right, then every year it need not go for service or maintenance cost. The maintenance cost will gradually come down, right? So these are semi-variable costs. They say all components, only simple oil change, those which is mandatory, only those they change and send it. Okay, so those comes under the semi-variable cost. Okay, are you clear?
Yes, ma'am.
Yes, right. So on the theory part, you can expect some questions like, what is that? See, for costing, if you have OP Kanna, I want you to use the OP Kanna book for costing part. Anyway, I will post the material onto your Google Classroom. Okay, so you can have a look at it. What is the role of cost accountant? First question will be define costing. What is the role of cost accountant? What are the objectives of cost accountant? First question will be define costing. What is the role of cost accountant? What are the objectives of cost accounting? Classify the types of costing, different types of cost. Explain the advantages of costing. How to control the cost. How to control the cost? Right? These are some of the questions on costing. Boys, now what I'm going to do is, now I want you to take down this. This is the preparation of cost sheet. the procedure for preparation of the cost sheet. I'm going to give you the format. Is it clear? Please take down along with me. Is it clear? Format of next class onwards, I'm going to start with the problems. Okay, so in this, first you'll have your opening stock of raw material. Okay, after that you can add, it will have, when you have a raw material you will make purchases, right? It will have all that. So here you will give the total units. Okay, then here you will write the value of it, then you will write the closing stock of raw material. Okay, you will add the purchases and you will subtract the closing stock. Then you will add direct labor cost or wages you pay for him, wages cost, whatever is involved. Okay, that will be the prime cost. Then you're going to add works, going to add overheads, OHS overheads. Okay, then all the overhead costs you're going to add. Then administration overheads, this can be, if you have to be more precise, this can be production overheads. Then this last one can be selling and distribution overheads. Okay, at the end will be the total cost. I hope you have copied this. So you should make it like a table. Okay. Oh, shit. So for, you'll have opening stock of the raw material, then whatever purchase comes in, you're going to add here. Then you're going to subtract these values with the opening stock. So this will be the closing stock here. Then you're going to add direct labor, wages or salaries involved. You're going to write here that will be coming under the prime cost. Then to this you will add production overheads. Then you'll have selling and distribution overheads. Then you will have administration overheads. So all together will sum up your total cost. This will how your cost sheet look like. Is it clear?
Yes, ma'am.
I hope you have taken down those cost sheet format. This is
Be honest, do you really want to watch a video that looks like this? There's a good reason why presenters use
At cost classifications. For more accounting information and accounting courses, visit our website at accountinginstruction.info. There's a few different ways that we can classify costs, and they all have their pros and cons, their benefits to classification in different ways. We're going to classify costs here by behavior. Now you may think, what does that mean? Do costs have behavior? And we could say, well, yeah, costs do have behavior in that they act in certain ways in relation to other activities. We're going to classify the two types of costs here being fixed costs and variable costs. This type of classification is not included in financial accounting. So if you're going from financial accounting to managerial accounting, this is going to be a new concept. And the reason we're going to have cost classifications by behavior is that it really helps with projections. So we have to have this because when we're looking into the future, it's really going to be helpful if we can determine how costs act so that we can make projections based on different levels of production. So we have fixed costs. Fixed costs mean that as production level rises, the cost remains fixed. So for example, if we have the activity down here, we'll say this is production if we're making units of something. As we make more units of something, the cost total remains the same. Remember here that we're talking about total cost, not cost per unit. We're starting here with total cost. So for example, if we're saying that the rent is going to be $1,000 a month, then it really doesn't matter how many units we make. If we're producing things in a warehouse and we make one unit in that warehouse, then it still costs $1,000. If we are producing in that warehouse and we make, say, 100 things, the rent still is $1,000. If we keep producing in that warehouse and we maximize the production of the warehouse, let's say it's 5,000 things, well, then units of production, whatever we make, then it's still going to cost us $1,000. No matter what we do, the rent is going to be the same. And so if you look at that in terms of the fixed cost, you're going to say, well, it's going to be what it is no matter what. So when making projections, then we can think of, okay, how many units do we have to produce in order to pay off the rent, pay off the fixed cost? So the other types of behavior that we're going to have, the major second group that we're going to have, and we're going to try to basically break everything out into these two groups, even though it's not possible or not all costs fit nicely into these two groups. We would really like it if they did, because that would simplify the world here. And we're going to try to do so that we can make accurate projections. And so the other type is variable costs. And variable costs are going to go up with each new unit of production. So for example, if we're making guitars and this is the cost of wood, the total cost of wood, and this is the activity, how many guitars we're going to make. Well, if we make one guitar, then it's going to cost, or if we make one guitar here, it's going to cost so much. And then if we make two guitars, well, the activity went up and the cost is going to go up in proportion. It's going to be a straight line because the cost is going to go up with the same number of units. Let's say the cost is for wood that's going to go in the guitar. If we make 3 guitars, well, then the cost of wood is going to go up in proportion to the number of guitars that we're making. So wood or direct material that goes into the cost of production is going to go up at a constant rate, and as opposed to something that is fixed, such as the rent. If we know those two things, then it's really useful for us to then make projections into the future, because now we can say, okay, how many guitars do we need to make in order to, get to this level of cost? And of course, we'll add into this pretty soon. We'll add into it the amount of revenue per guitar we're going to get. And if we take the revenue minus the variable costs, then we can say, okay, how much are we making over the variable cost to see how many units we then need to have in order to clear the rent price. And that's how we start to kind of think about these things. What do we need to produce in order to clear our costs? It's a lot easier to make those types of production projections if we can break all costs up by behavior between fixed costs and variable costs. Now, some costs will line up in these two very easily, and it won't be a problem. If we're talking about wood in the guitar, then that's probably pretty straightforward. If we're talking about the rent, that's pretty straightforward. But we're going to have some things that aren't quite as easy to go into these two components. They may have some combination between fixed cost and variable cost. And what we really want to do is break them out between those two for our projection purposes. And we'll talk about different methods that we can do that. That's going to be one of our goals in managerial accounting, is to break everything out between fixed costs and variable costs, that allowing us to make nice projections into the future. Another way that we can classify costs is by function. What does that cost do? Why are we incurring this cost? So we can have direct costs and indirect costs. Direct costs are going to be costs that are traceable to a cost object. So if we're in a production cycle, then direct costs would be things like direct materials and direct labor. These are things that we can trace to a particular unit of inventory that we are producing. So direct materials, we know exactly if we're making guitars, for example, we can trace the wood in the guitar to a particular guitar that we are producing and allocate the cost of that wood to that piece of inventory, to that guitar. If we're talking about direct labor, same thing. If someone's putting together a guitar, we can allocate the cost of the labor that's being put together to a particular piece of inventory, a particular guitar. On the other hand, indirect costs are things that we can't trace, are not traceable to a cost object. So examples of that are going to be maintenance costs for multiple departments, or things like glue, or things that we can't put to a particular guitar. If we're making one guitar, then we can't really have these indirect costs allocated specifically to that guitar. It's going to be indirect. So if we talk about maintenance for multiple departments, then possibly the maintenance is going to be for the entire warehouse, and we can't apply the maintenance, for example, to one particular guitar because we don't know how much to apply to a particular guitar. The production process needs maintenance within the warehouse, but we can't assign it directly to a particular guitar. And we can take that concept to different departments as well. If we pay for maintenance for multiple departments, then the maintenance is there for multiple departments, but it's difficult to allocate to a particular department. And we're going to have to figure out some type of way then to allocate these indirect costs. That's going to be one of the challenges we have. If we have maintenance for multiple departments or multiple units of inventory, how then can we take this information and allocate it to its particular unit, which we don't really know. We have the similar problem if we're talking about small materials like glue or something for a guitar. It might be possible for us to classify glue as a direct material that we can then allocate specifically to a particular guitar that it was used in. However, doing so would be not cost effective typically. So if we're talking about something like glue or something like that, then we might have to use some other type of allocation method. We don't know exactly which piece of unit of inventory it was used on, so it's indirect. So we have to find some way then. Our challenge will be to take these indirect costs, these costs that we know need to be allocated in some way in order for us to properly value our inventory, and try to allocate them in some way, even though we don't know directly where they apply. And that'll typically be the concept of overhead. So anything, for example, in a factory that we work on, if we can't apply it directly, direct materials or labor, it's probably going to be an indirect cost, something that's going to go into overhead that we're then going to have to figure out how can we allocate this to our units of inventory to properly allocate the inventory. So if we're talking about depreciation on a warehouse, then that depreciation is part of the cost of making stuff, making the guitars. But how do we allocate it to any particular guitar? We're gonna have to figure out how we can make those types of allocations. There's a supervisor in the warehouse that's supervising all the guitars we make. How do we know how much time we should put that supervisor's time on a particular job? We'll have to figure out how we can make those allocations. So that's going to be one of the challenges we'll have as we work through the manufacturing process as we allocate costs. For more accounting information and accounting courses, visit our website at
Boys, I hope all your doubts are clarified. I hope at the end of this class, you should have understood what is direct cost, what is indirect cost, what is material cost, what are labor cost, what are expenses. And I think I've given you the cost sheet format. So tomorrow's class, when I start doing the problem, you should know the format. When I'm giving the problem, you should know first preference will be given for the material cost, then will be your labor cost, then we'll be giving importance for selling and expenses. Now under material also, the closing material, purchases, all that will come here. For labor also, direct labor, indirect labor, all those charges will be coming here. And expenses also, overhead charges, all those will be coming here. Is it clear? So we'll look at it format, and based on the format, we'll be solving problems. Is it clear? So today's class, we have done the basic theory that is required for us to solve problems on costing. So today's attendance, Baswaraj is there, Chandan is there, Neelesh, Prajwal.
I'm there, ma'am.
Okay. So I have got 6 people on my list. 3, 6. Yeah, 6 people are there. So, but can you please ask the others, like Alok and all are coming for the other classes, huh? Abdul is coming for the other classes. What, Neelesh? You tried to say something. Alok is coming for the other classes.
No, ma'am. He has the
What
same
about
frequency on the classes also.
Abdul Khalik? Have you seen him? Abdul Khalik? Sheikh Manan is absent today. Sumuk? What about this Rajat Kumar, Uppalla Chanukya, and Simika? Are they available in the other classes? No answer. Okay, then thank you. Then we'll wind up with this class. Okay.
Thank you.
Thank
Today
you, ma'am.
I'm postponing on Saturday. So quiz together I will be giving on Saturday. Okay.